right, let's get to Steve Leisman as Powell's prepared remarks just crossed the tape. Steve.
Yes, Fed Chair Jay Powell will tell the Committee on Banking, Housing, and Urban Affairs that the labor market conditions have cooled while remaining strong. Most recent inflation readings, he says, have shown modest further progress. And he calls monetary policy restrictive and says restrictive monetary policy is putting downward pressure on inflation. The committee, however, still seeking greater confidence inflation is declining before reducing rates. He quotes that part of the statement which says that. Then he uses the phrase, more good data, he says, would strengthen our confidence that inflation is heading towards it. And he's really referring back to the most recent inflation reports we've had. Elevated inflation, he says, is not the only risk we face. So he's talking much more two-sidedly about the risk. And he goes on to cite the risk of moving too early and too late, as he has done in the past. The risk to achieving the employment and inflation goals are coming into better balance, the Fed chairman says. And the economy continues to expand at a solid pace, moderating in the first half after strong growth in the second half of last year. Here's what he sees on the economy. Solid increases in consumer spending, moderate growth in capital spending, a pickup in residential investment, and labor market strong, he says, but not overheating amid improving supply conditions. Finally, he says that wages are modest. Wage gains have been modest, and he says decisions are made meeting by meeting. I don't know if you want to check the probabilities right now, guys. They had gone into it with a 75% chance of one in September, 86% in November, and that second cut was trading at like a 75% probability for December.
Yep, Steve, I don't hear much in terms of a different message than what we got from him last week in Portugal. Do you?
I would say a nuance on the labor market. I would say in terms of the labor market cooling, but still strong. He's picking up on the recent employment report. Maybe a little bit more wide open. I think he took a step in Portugal. Maybe this is another step towards the idea of being open to that rate cut, though not necessarily promising anything, still going back to the old language of confidence. So I'd say a modest step here towards the dovish camp, but not necessarily a big one.